Hello everyone, happy Sunday. Hope you guys are doing well. I did not, or my team and I did not make an announcement, so many of you guys are probably gonna have to catch it on the replay. All right, audio check is good. Apologize for not getting the announcement out. That's on me. Should have told my team to get on that. All good though. The recording will be up, so if you guys don't make it on time or aren't able to make it during the live, not a problem at all. Hope you guys are doing well, guys. Happy Sunday. We're back at it with another weekly outlook. Crazy non-farm payroll week last week, which is to be expected. Absolute carnival ride. But now we got the cleaner price action of the month ahead, which is the last 3 weeks of the month, which is the weeks I prefer to get after it. So absolutely banking last week, every month, and now we're starting the new month of August. So with that in mind, going into a new month, you want to keep in mind the new monthly open, the new monthly candle, the power of 3 on that time frame, and then we'll go ahead and refine it to the time frames, and I'll share what I'm looking for. And then as always, I'll take your guys' questions at the end. So let's go and get right into it. Like I said, hope you guys are doing fantastic. Thank you guys for joining us. RJ, locked and loaded. Glad to have you, Robert. Williams, afternoon. Amy, hello, hello. Joe, hope you're doing good, man. Happy Sunday to you. Islam, I'm doing good, man. Happy Sunday to you, man. All right, guys, let's go ahead and get right into it. All right, so we're taking it from the monthly chart here with the US dollar. We dropped down into this down close candle, which is a bullish order block in the discount that we've been watching. Saw a nice little reaction out of that, but then we just opened the new monthly candle of August. I'm watching how we trade inside this down close candle here. Down close candle, we're trading into it now. I want to see if that can act as support, or if we trade down through it, then that'll give me other insight if we do that. So I'm watching this down close candle going forward. Do keep in mind though that we just opened the new monthly candle. Further refining down into the weekly chart here. Last week, we retraced down into this fair value gap here. So far, it lends support with the down close candle. And then we saw a really nice displacement higher, signaling potential institutional sponsorship. What I want to see going forward is if we can sustain that rally to the upside, and then I could confidently see this as a potential market reversal to work back into the range here. Yeah, that's it for the weekly chart. All right, so dropping down into the daily, further refining what we're looking at here. I'm watching this bullish breaker. We have a low, lower low, this high step close candle. I'm extending that through. I want to see how we trade there. If this is going to be a bullish breaker, this gap here should be a breakaway gap, so we would not want to see this entire gap filled in. So those are the signatures and the clues that I'm going to be looking for going into this week. Do we leave this as a breakaway gap? Do we respect the bullish breaker? If we start to trade down through it, we disrespect that level, no problem. That's fine. We'll get in line with what the market's showing us, and then we'll look for lower prices if that's the case. However, as of right now, I want to see how we trade inside this breaker. Again, if we trade through it, that's fine. It'll hit the low end of it, sell off, and then I can get in sync with what's happening. Or if we use it as support, leave the lower half of this gap open and start to run higher, that would be extremely bullish for what I'd be looking for. So we're still in the beginning of the month. We've just seen actually the first day of trading so far this month. So not in a hurry to try to call the high or low of the month yet. Just let the market do its thing, let it play out. And then once we get more information, we'll be able to have a directional bias with a lot higher, greater degree of confidence. So watching this bullish breaker here, watching this fair value gap, both those levels where they're overlapping are going to be of interest to me going into this week. Lucian, hello, sir. All right, dropping down into the 4-hour chart now. We can see we also have a small range here. So this is that daily breaker that's extended through. And we'll also be watching the dealing range from this low to this high. We've also dropped down into equilibrium. So we have a couple things here. Sell side here, bullish breaker, and also a discount market of the range that we're trading in. So we'll be watching that going forward. How we trade here is going to be extremely influential for me. I don't need to have the perfect top or the bottom. So what I'm doing right now is I'm waiting for more information. If we zoom out, the dollar has been in a serious downtrend just about the entire year. And it was a really easy price run to see when they took it down into the sell side here. But after we dropped down into that sell side, it's more so been neutral and waiting for more information. And that's where we're at right now. Because again, huge price swings like this take time to pan out. And that's what I'm waiting for to set up here. All right, that's good. So going over to the bond market now. Bonds still remain inside this terrible consolidation here, which has been making things slightly more difficult from an intermarket analysis perspective, but nonetheless still able to get in there and sort it out. But looking at the monthly chart here, we're in a range consolidating. The market's not showing any willingness to want to leave this range. So as of right now, I'm still neutral on bonds until we see some measure of displacement outside this range. Hey, Kevin, happy Sunday to you, man. And then dropping down to the weekly chart, we can see it even more clear. consolidation profile, again, making it low probability, at least for the bond market for right now. And what I'll wait for is a displacement on the time frame we're consolidating. So we're consolidating on the monthly chart. So I'm going to look for a displacement on the monthly chart until I can say with a great degree of confidence that we're leaving the consolidation range. And daily, nothing else. If I don't know where the monthly weekly is going, then it makes the daily lower probability outside of small scalps. You have these relatively equal highs here. That would be a nice draw on the upside. But then once we get there, it'll be a matter of seeing how we trade at that level. And then that'll give us the information we need to proceed forward. All right, now for the $1 million question, indices. Let's go ahead and get into it here. Start from the monthly. All right, so we're going to take it from the top here with the monthly chart for the NASDAQ. We're inside this monthly fair value gap now. I'm going to be watching that. Like I said, we just opened the month of August 2 days ago on Friday. So we just had one trading day so far in August. Generally, what I'm doing is exactly what we did last month, right? We were very clearly bullish. Wait for the open, wait for the low of the month to price in, and then just trade the distribution higher. And we were all over this like white on rice. So essentially, that's what I'm looking to do going into this week. I want to see how we trade inside these key particular levels. So again, looking at last month, open, low, high expansion, and the bullish bias was absolutely money for the entire month of July. Looking at this month now, the reason I bring that up is because that's what I'm going to be looking for going into this month, how the monthly candle is likely to form. If we're going to remain bullish longer term on indices, then I would want to see this monthly gap support price and ideally stay in the upper half. The reason the gap is extended up into here is because there's a small little volume imbalance that needs to be incorporated as part of the fair value gap. So watching this monthly fair value gap here going forward, dropping down into the 2-week chart. Man, 2-week chart, man, it's giving some sauce here. All the time frames are the same. You don't want to be limited by just the traditional time frames. The algorithm or IPDA works on all time frames. So what I'm watching here on the 2-week chart is just a refinement of that level we're watching. We have a fair value gap here with this bullish breaker, and I'm going to be watching this level going forward. If we are going to remain bullish, then I would anticipate the market dropping to rallying here, and I would need to see it do it in this level. However, if we just trade to and through it, then that's going to give me a different insight. And then, like I said, we'll pivot if and when we get that information. All right, working down into the weekly chart now. Get into the more traditional time frame here. So we still have this bullish breaker here extended through and the weekly fair value gap. I'm going to move this over so you guys can see this clearly. We have this weekly gap here. That's my drawn liquidity for this week. I know there's not a whole lot of range. I think it's just about a couple hundred, 300 points to get into that gap, but that is my draw going into this week. So I'm going to look for the market to trade into this weekly fair value gap. Then I'm going to wait for more information. I'm going to study the market structure. I'm going to study the order flow, and I'm going to see how we trade inside this key level. And that's going to give me all the insight I need going into the new week in terms of a weekly bias. And then also as I'm starting to frame my monthly bias for the month of August. So weekly gap is the draw here. And then from there, like I said, I'll have to see how we trade at those levels. To give you more levels, we have the high. We have the midpoint, but you also want to have the quadrants on here as well. So first draw would be the high of the gap. Next draw would be the upper quadrant. And then if we start to show some weakness through that, then we can look for consequent encroachment or midpoint of the fair value gap. Daily chart, and again, before I go into lower time frames, I'm not trying to call a top in this market yet. Like I said, if it is going to be a top and we do top out here, then the market will show me inside this weekly gap. So I'm just going to watch how we trade there. We're coming off non-farm payroll week, which is now dropping into the daily chart. One of the things I've shared before, I'll share it again, especially for those of you guys that have been working with me for a little while now. On NFP weeks, I don't really care too much about daily bias because on NFP weeks, Monday, Tuesday, I'm getting paid. Once I get paid, I'm done. Very simple protocols. I've been doing that for years. After getting spanked around early on in NFP, obviously just not knowing what I was doing. Not that it's not tradable, it's just the week that I generally use to decompress, take some time away from the markets so that I can hit it hard in the weeks that I prefer to trade. Really nice price runs last week, and that's what we're going to get into now. As I was saying, though, I generally don't have too firm of a daily bias going into NFP week because it can do a lot of stuff like what you saw here. Monday, Tuesday, consolidation into Wednesday, and then just absolutely unraveled Thursday going into Friday. Didn't predict this, didn't need to, still able to make plenty and reach my weekly goal Monday, Tuesday. Looking at this here now, we've seen a huge breakdown to the downside and then a really large candle on Friday, which again makes sense, it's NFP. And generally what you want to look for on the three main news drivers, non-farm payroll, FOMC, and CPI. ICT explained it really well in one of his lectures. I can't remember which one. Listened to so many from the guy, but they're disruptor events. And what that means is, what's the underlying order flow been on NASDAQ? Clearly bullish, right? Who's been making money? Longs. So what I look at, or what I anticipate on these particular news drivers, those big three, the main three I just mentioned, is I'm going to look for the market to upset the underlying sentiment. And that's what I mean by a disruptor event. So it's going to disrupt the underlying sentiment and narrative. So what's that been? Bullish. So if you're a fund level trader, because again, the markets aren't after retail risks, three micro contracts. Trust me, they don't even care. What's really happening here is the smart money is cannibalizing the funds. How do the funds trade? Why were we long? Because the funds don't know what the fuck they're doing, and they have buy stops here, right? So the market's going to run up into those buy stops to seek that liquidity, right? So that's just one example that you guys saw me call live here in direct. But that's the reasoning behind it, because the market is seeking the liquidity, but more specifically the fund level liquidity. So now with that in mind, what do you think would be down here? Funds trade like retail. So they see the market ran, relative equal lows. That's probably a good place to do it. Put a stop loss. And then Friday perfectly reach down into that to upset the liquidity. What I'll be watching for going forward in this new week here would be a potential TGIF retracement. So we did not get TGIF on the close yesterday, so it'd be interesting to see if we get a TGIF retracement, then a sell-off, and that's what I would look for going into the new week. The only exception to not getting a TGIF would be if we just gap down off the open and then just quickly accelerate into these targets. If we do that, then I'll have to see how and when we trade at these levels, but those are the two scenarios that I'm looking for. What I'd ideally like to see on Monday would be a TGIF retracement and then sell off into those levels, and that would be a tradable opportunity for me. If we just gap down and aggressively run for the liquidity that I have marked here, then I'll just have to take that information as I get it and then pivot from there. So NFP week, reaching for the liquidity here and then reaching for the liquidity here. And what these events will generally do is they'll reach for liquidity outside the general ranges, right? So it wouldn't be reasonable on a traditional day to expect the market to crater over 600 points to reach for liquidity. But on these particular news drivers, that will happen. So you should be very mindful of the economic calendar, but more importantly, you want to know how to use it. All right, working down into the so let me share targets here. So this low's already been delivered. I like this low down here. And then through that, we have the midpoint of that weekly gap here. And then if we start to accelerate through midpoint, then my attention will go to this daily fair value gap down here. I'll make that a different color. So if we accelerate through all these levels here, then my attention will go all the way down to this daily fair value gap. And that would take us into a nice discount of the range here. So we have a dealing range. Dealing range low, dealing range high. We have equilibrium right here. And then the first thing we have below equilibrium is the sell side here, as well as that weekly gap. So another factor as to why I look for the market to drop, because we have a dealing range, and look for the market to reach into a short-term discount. Then once we get to that discount, I'll have to assess, see the market structure, see the order flow, see how we trade at those levels, and then that'll give me the insight that we need longer term. All right, dropping down to the 4-hour chart here. Really violent drop, really clean price action Thursday and Friday. So sell side here, and then sell side here, just running for all that on Friday, going after the stops that would be down here from anyone that's long. New month open, we expect a power theorem manipulation. So that's what I'm still watching. I'm still not abandoning the bullish bias, rather. I'm looking at this as a short-term retracement or a correction, which is healthy in bull markets, right? So if we're going to see and not that anything is healthy or real about these markets, it's all fake. The valuations, the PE ratios, these stocks have no business being valued at this level, but we understand it's fake, rigged markets. He's got to know how to trade the fakery. That's why fundamental guys get smoked a lot, because you have to understand that it's rigged, it's manipulated, but that's a whole nother conversation. So we have equilibrium down here, we have sell side here, and the weekly fair value gap, and that's what I'll look for as a draw liquidity going into the new week. What would, there's really no need to share what would invalidate it, just because that's what I'm looking for. And if that changes, then I'll have to assess when I get that information. All right, so with that being said, that's all I have. No need to go into hourly chart. Already covered most of the business here on the 4-hour, but as you can see here, we have relative equal lows. They did stab into that in the last hour. or sorry, the 2 o'clock hour to close out Friday, but that's a really shallow run. So I would suspect they're going to do another run down into that. And then that would take us into the weekly gap here. And then if we accelerate through this low here, then my attention goes down to this low here, the 22,582 level on the downside. In this price run here, the market's extremely bearish. For those of you guys that work with me, you guys already know breakaway, measuring, and the market is extremely bearish, showing no willingness to want to fill these gaps. And that's exactly what you want to see in a bearish price run. So with that in mind, guys, I will share updates throughout the week. So if you're not in the free Discord, do join. I see my team just sent that in. Thank you guys very much. Do join the free Discord. And as always, I'll give you guys updates throughout the week as to what I'm looking for. And sometimes also throw in market reviews that would generally be for my mentorship group, but also want to spread some of the love and help you guys out that are in the free community as well. So stay tuned for that. More updates are going to come throughout the week, and I will be sharing more on that end. As far as the YouTube, haven't forgot about you guys. Have a huge project ahead of me with building the #1 online trading education. So that is extremely demanding of me. But as soon as I am done with that, which I am forecasting to be done in the next month or so, I will be back on YouTube consistently sharing with you guys, and I'm looking forward to doing that. So make sure you guys get those suggestions to me so I can build a log of ideas that you guys would want to see, and I'll be more than happy to put that together for you guys. So with that in mind, that's everything I've had here. Any questions for me before we get going? Craig, new trading week loading? Yes, sir. Alessandro for ICT display. I got you, Alessandro. So you're referring to the US dollar? Yeah, Alessandro, let me know what market you're referring to, and then I will I'll come back to your question. I believe you're talking about the monthly order block for the dollar, but I just want to confirm. So confirm that for me, Alessandro, and I'll go ahead and get your question answered, man. Amy, if you haven't covered yet, gold, silver, and Google. Yeah, absolutely. Let's do that. All right, Google. Yeah, so all stocks taking a pretty good beat down, given that we sold off on Friday on the indices. All right, so for Google, what I'd watch here is going to be this weekly fair value gap. That's going to be instrumental going forward. On the monthly chart, nothing is bearish as of yet. We just did trade into this up close candle, but if we're going to remain bullish, then we will likely seek the buy side. What I'm watching on the weekly chart here would just be this fair value gap here. So I'd be mindful of this gap here going forward and see how we trade there, and that's what I'd look for on Google. For gold, gold's still in a consolidation. We talked about this last week, which again is reasonable. Again, just zooming out, it's very important to zoom out, get some perspective. We've just seen gold do 100% rally, right? So it's absolutely mooning. So it's reasonable for the market to consolidate, build some sentiment, and we're still in that right now. I'd still do favor bullishness. Nothing's bearish in the gold market. Inflation is going to keep soaring, and pretty soon we are going to see hyperinflation in the dollar, and that is going to put commodities on the moon. So with that in mind, we will be seeing more strength on gold. In the short term, a lot of things can happen, but longer term, I'm looking for gold to trade much higher. We've been consolidating here. If we break out of this range to the upside, then we have much more higher prices to look at on gold, and then you can run fib projections on this leg here to the upside for further upside targets. All right, gold, Google, and oil. All right, so looking at oil, we have not left this inversion fair value gap that we've been watching for a while. So if you guys remember, when we had this huge drop on the de-escalation of the war and whatnot, they dropped it down into this weekly inversion gap. We're still extending that through. I'm still watching how we're trading there. I've been monitoring crude oil. We are seeing the body stay on the upper half, which is positive, but we have not shown a really meaningful displacement away from that. So I'm still watching that here. I still remain long-term bullish on crude oil. I still think commodities are not just going to go higher, but they're going to go much higher in light of everything going on. But right now, just hanging out inside this inversion fair value gap, not really displacing, showing any speed away from it. It says right now, bullish to neutral on crude oil until we can see a decisive movement away from the upper half of this weekly inversion fair value gap. Alessandro, any market, which is a general question. Okay, I got you. All right, so for ICT, just for example, an order block. Yeah, so in terms of picking the PD arrays, I see what you're asking. Let me go to dollar. There's a few things you have to understand. So now I'm not sure, because you haven't worked with me, how really advanced you are in terms of ICT, but if you understand grading a price swing and implied dealing ranges, then that's going to be a big factor. So if you look at this down close candle, like why this down close candle here? Well, I like this down close because it's the last one before this impulse run higher. So I'm assuming that institutionally minded traders position themselves inside this order block. So it's a down close with the fair value gap. At 75% of the price run, or the 25% of the price run. So whenever you are grading your price swings, this is where your PD arrays are going to form, right? So they're going to form at the 25%, at the 50%, this order block here as well. And then if we go into like a 3-day chart or something, you'll be able to see more accumulation taking place here. So if you grade the price swing, you can see order block here. That's why I like this level here, because smart money's algorithms are going to interact with the algorithm that delivers price, and they're going to accumulate at these levels because the market's coded, it's rigged for these smart money traders. So the reason this is an order block is where it's forming in the price swing. If you understand how to grade a price swing, and then you can see the same factor here at 50%, and then the same thing here at 25%, then they reach the draw liquidity. So that's what I use to pick the right order blocks, pick the right fair value gaps. You have to know which ones the algorithm's going to use, and it depends on where we're at in terms of the grading of the price swing and where we're at in relation to the beginning of the price run and the full draw liquidity. And if you understand those factors, then that's how you go about picking the right levels. So hopefully that makes sense, Alessandro. I know for those of you guys that work with me, that's crystal clear, but if you haven't been with me for a while, there's a lot of things you have to be able to put together to know how to pick the right fair value gaps or order blocks or whatever the case may be. But the wicks are also relevant, yes. So because wicks are inefficiencies, they are also key levels as well. So the overlapping of the wicks here does create a PD array. I'm not going to get into all that here, but just understand that that is significant. Tobago, hey Dylan, hello sir. Williams, I think dollar printing that weekly wick is just painting the idea of rejection. Yeah, that's exactly what I'm seeing, Williams, and that's why the thing I'm going to use is like a litmus test to determine that is how we trade inside this down close. Because if we're going to see a bullish month of August, then this is just a drop to create the wick. So it's like a open low, and then we'll see the high and then the close off that high in the expansion higher. So that's why for right now, all eyes are on this down close candle and that daily breaker. And then from there, that'll give us all the insight we need. And if they just trade down through it, then that's fine. That's going to give us more insight. And then we can pivot and take what information the market is giving us. So that's why I'm more neutral to bullish right now, because I want to see what they do. Because again, we are still just in the first trading day, well, going into the second trading day of the new month. It's big. I'd just like to thank you for the journaling video. It really helped me a ton. Love to hear that, man. Love to hear that. That's exactly what this channel's for. People that aren't fucking around, people that want to trade, want to do this successfully. It's not a hobby. It's not something that's just a part-time little, entertainment for you. This is for people. I work with people that want to make this into an income stream, want to take this serious, and make this into an actual business. So that's why you'll notice that a lot of my content is direct, it's straightforward, and it's no bullshit. And because if you want to learn how to do this well, you absolutely need to be doing the right things, right? You're not going to fuck around and get $1 million results. That's just not how this works. And unfortunately, most people don't understand that. They fuck around. And unfortunately, I've spoken to people that take years to get profitable, like lots of years, 5, 10, some 20. And it's absolutely unnecessary if you're doing the right things. And my goal with this channel is to save you guys from that. I don't want anybody to have to live the nightmare of being unprofitable for 5 to 10 years because you're not doing the right things. And I'm glad that the resources and what I'm sharing is helpful, and I do appreciate your feedback. Eslam, how do you trade when the market is decoupled? So decoupled in what sense? Like on the higher time frame or intraday? I'll answer both. If it's intraday, like for example, let's say we get into the 9:30 open, we have NASDAQ dropping, Dow ripping, and S&P consolidating. In that type of scenario, I will scalp, I'll reduce risk, I'll scalp, and I'll take partials really quickly. I don't like to mess around in decoupled markets. I use the decoupled markets as insight, because think of what decoupled markets is on the higher time frame. It's an S&T divergence. So whenever the markets are decoupled and there's that crack in correlation, it's signaling something. So what I do is I'll wait for the markets to get in sync. Then once they get in sync and I have a good idea as to where the market's going to draw to, then I will use that information. But if they stay decoupled the whole time, then I'll just scalp, low risk, and pay the trader relatively quickly. I'm not a big fan of decoupled markets. So that's what I do. I'll wait for them to become coupled, and then I'll see what SMT is being created, and then I'll use that as insight to trade the next price run. If they're decoupled on the higher time frame, like kind of what we've been seeing the last few days, I just know we could see a shift coming. Let me share what I mean here. or anticipate a shift rather. So looking at the Dow, right? So earlier in the week, from Monday, we were just dropping entirely. So the Dow was just selling off right out of the gate on Monday. If we look at NAS is actually pressing higher all the way into Thursday. So you may see that as decoupled markets, but I'm seeing it predicting an SMT divergence. So when I see Dow dropping, NASDAQ trying to rally, I'm taking a step back and I'm saying, okay, we might have a shift here, because that's what it's designed to communicate to smart money traders. That's why it's called SMT, smart money technique. Great question. Can you do NVIDIA? Yeah, let's take a look at NVIDIA. Yeah, so NVIDIA's at all-time highs, so still looking for higher prices on NVIDIA. As always, for stocks, guys, be mindful of indices, because the indices are going to dictate the stock market. So, for example, we're watching that weekly fair value gap on NASDAQ. If we just melt through that weekly fair value gap and drop 2,000 points, am I going to tell you it's probably a good idea to go long NVIDIA? Probably not, right? So you have to still be able to weigh that out. And the indices are going to give you a great deal of insight for the stock market. So you can see, obviously, NASDAQ's at all-time highs. NVIDIA is as well. So using the bias that I'm sharing for indices is going to be extremely helpful for the stock market. So we're at all-time highs for NVIDIA, so I'm not trying to call a top in this market either. Watch how we trade inside that weekly level for NASDAQ. If we show bullishness from there, then we'll see continuation higher on NVIDIA. If we show weakness through that, then that would change my outlook. But as of right now, everything looks bullish this market. There's nothing to go short. So I would just keep trusting buy models, looking for higher prices on just about all stocks, especially tech stocks. Kennedy, hey Dylan, when is the high or low of the month mostly anticipated? That's a great question, Kennedy. So what I do for pinpointing the high or low of the month is I use time and price, right? So what do I mean by time? Well, we're at the beginning of the month now, so it's reasonable to like scope that out and start hunting that. But then I need to see key price levels. So what do we have here? We have a key discount level, which is our monthly fair value gap, and then we have a monthly opening. So what I'm watching is how we trade at the open and how the market interacts with this level down here. Right? So for example, if we're going to be bullish, what would I want to see the market do? Open, drop, and then I'm going to look at the hourly chart. Does market structure turn bullish? Do we create an intermediate term low or a long-term low? And then start to see bullish order flow to the upside on the intraday timeframes. And then if I see that and an SMT below the opening price, then I can trust that that's been the low of the month, and then I would trust buy models for the remainder. Hey Sal, what's going on, brother? Glad to have you. Pathway, how long it took you to work on your entries? It's always a work in progress. It's always a work in progress. So I was profitable with just a simple fair value gap entry. Now, one of the pursuits in my trading is getting in near the low of the day. So like as soon as I see the low of the day is priced in, change in state of delivery, I'm trying to get long as close as I can to that low of the day below the 930 opening price. So that's the pursuit right now. But at the end of the day, it all makes money. It's just a matter of where you're at in your development. Don't get too caught up on the entries though. Learn how to read price, learn how to find the drawn liquidity every day, and entries become easy once you understand that. Alessandro, thank you, sir. Yeah, my pleasure, man. Love your analysis. Last one, thoughts on silver? Yeah, let's take a look at silver here real quick. Seen a little pressure on silver recently with the strength we saw on the dollar. But as of right now, silver is still bullish in my estimation. We called this breakaway gap a couple months ago, so that was left open. We had this bullish breaker here, so breaker with a fair value gap, swing low forming inside that, and then expansion higher. Now we're retracing. Watch this down close candle here. I want to see if this can act as a bullish order block here for silver. Oops. So yeah, watch this weekly down close. If we're going to be bullish, I want to see this act as a bullish order block. Reason being is because this was an institutional order flow entry drill, I want to see this down close support price. So that's what I'm watching from here. Daily chart. Yeah, watch that breaker here. You can see it now on a breaker. Every higher time frame order block is a lower time frame breaker. So watching this level, I like how the bodies are respecting that. So watch this fair value gap here. Two scenarios: if we trade into this fair value gap, get above it, use it as inversion rally. That's what I prefer to see. But if we trade up into it, reject, sell off, then that's obviously going to give you totally different feedback. So these are the two key levels that I'm watching, what I'll be looking for going into the week for silver. Williams, yeah, I just want to be able to pay my bills, eat well. This is why I'm keeping at it. Absolutely, man. Absolutely. It's a work in progress. And that's exactly the mindset to start with. I've worked with a lot of people, and many times we have a huge lofty goal of trying to make 10 to 15 grand a month in your first year. and you've never even made $1,000 consistently, right? So one of the things that I've done for myself and for others that's really helpful when you're starting to find consistency is manage your expectations, right? So just go after the biggest bill. And I learned this from ICT. It was really instrumental in my growth, which is when you're starting, don't try to swing for the fences and make 15,000. Because trust me, if you're not making 1,500 a month, you're damn sure not going to make 15,000 a month. Trust me. So with that in mind, work towards making your ends meet. So what does that mean? What's your biggest bill? Mortgage, rent, whatever the case may be. Try to duplicate that every month. And then once you duplicate that, now that's taken some of the pressure off your shoulders. You can grow, you can scale your trading. And then from there, you can double the rent, right? And then from there, now you can make 50% of all your bills with your trading, right? And then from there, you can work towards 75%, then 100% of your bills. And then from there, you can start working towards doubling that income. But it's a work in progress. And if I could go back and I had to do it again, that's exactly the process I would go about it, William. So you got the right mindset here for the right things. Keep that in mind, and I think that'll serve you very well, man. James, hello, sir. Hope you're doing good, man. Quick breakdown on euro. Yeah, sure, Craig. I got you. Same thing as dollar. So just be a short and sweet one here. Let me look at the euro pound here. Yeah, so for euro, same thing as the dollar here. Watching this down close here, see if it wants to act as a bearish breaker. If we trade through it, right? If we trade through the breaker here on a closing basis, then my attention goes to the buy side here. Same thing on dollar. So personally right now, I would like to see the market rotate lower from here. So that's why I'm kind of neutral to bullish on euro, but all eyes on this level here. And that's the level I'm going to be using this week to frame my directional bias for foreign currency. Quick question, is there a difference between SMT divergence versus Six Sister? Yeah, so they're two entirely different things. SMT is a Kraken correlation. Six Sister is when the Kraken correlation is erased. So for example, if we're bearish and there's an SMT at the highs, then the market's going to sell off. If we're bullish and there's an SMT at the highs, the asset that did not take out that high is going to look to reach and catch up to it to price in market symmetry. So they're actually two opposites, but it's just a matter of whether you're bullish or bearish, and that's how you're going to know if it's actually a real SMT or if it's going to erase the SMT and become a Six Sister. So do you consider the Dow when the market is decoupled, or the three of them? Yes, I do have a, let me see if I can pull this up for you guys here. Yeah, so I am looking at a template on my main trading layout that shows me this right here. So I'm always looking at market breadth. I'm looking at the leadership issue. I'm looking at all the different averages. So I'm always seeing S&P, NASDAQ, and Dow side by side. And it's just a small little square up here on my 49-inch monitor. And I'm looking at this information every single day because I do want to see the relationship between the three averages. Hey, Luca, my man, what's going on, brother? Yeah, that's a great question. It's about saving. Let's go to NAS here. Yeah, so excellent question. So the question is, what's up, bro? Do you think that two large range A's were a kickoff to exit the summer low volatility period? Yeah, man, I'm thinking based off where we're at right now and how we kicked up or started and how the volatility is kicked up going into the new month, I'm thinking we can see major volatility going into August if this continues. The bond market saw a huge run on the daily chart. The ranges on the dollar are also, the ranges on the dollar are also very open, moving really nicely. And we're also seeing the same for indices. So as of right now, I think we are going to see a lot of volatility, a lot of opportunity in the month of August. And I think we're just getting started. So I think it will be a great month in terms of opportunities for us. Yeah, so generally, traditionally, and this has been the interesting thing from like a coaching perspective, is like, for example, the last 3 to 4 years and back have been very different than the recent climate we've been in, right? So one of the things with the recent climate is generally July and August is a very bad month. If you look at the seasonal tendency, it's usually sideways and consolidation. However, given everything that's going on right now, there's a lot of incentive for the market makers to push price all over the place. So based off what I'm seeing right now, given the climate with everything going on, I think we're going to have a very active month of August. And I do think it will be the exception. I do not think we're going to have a consolidation month of August to close out the month. Well, to begin and close out the month, I think we're going to stay with this high level of volatility, considering everything going on and how the markets are delivering right out of the gate. What platform is that? how do you get to the super chart section? I have no idea what the super chart section is. Oh, here. Oh yeah, this is just TradingView, man. It's the TradingView desktop. Don't use any of that here. These are just all my templates that I use. I have a lot of them. A lot of information to sort out. All right, guys. Any further questions here before we get going? Damn, I got it up 65 here at the end. That's on me. I should have sent an announcement out sooner. My bad, guys. All right, guys. Anything else for me? Hit the like button on your way out if this one was helpful. No more technical issues. I actually got the adapter sorted out, so won't have any more technical issues. That's been sorted as well. Any questions here before we get going, guys? Nope, no more. All right, guys. Hope so was insightful. I will, like I said, provide updates in the Discord as necessary. And because we're in the beginning of the month, I would definitely recommend checking that out because things can change. I may get new information, and I want you guys to be up to speed every step of the way, and that will be done in the free Discord. With that being said, guys, have an amazing rest of your Sunday. If you have any questions, you can drop them here, or if you didn't get the opportunity to, as always, our main chat is open for all you guys. So with that being said, have an amazing rest of your week, guys. Take care, and I will see you guys when I see you guys. Take care.